conclude the public portion of today's meeting with a public board meeting. Commissioner Horowitz.
Thank you, Mr. Chairman. Today's meeting of the Committee on Finance is being held in public session. The committee also met in executive session earlier today to discuss matters involving ongoing negotiations or reviews of contracts or proposals. At this point, I ask the Secretary to advise those present of the composition of the Committee on Finance and any commissioner recusals on the matter before the committee at today's meeting.
Thank you, Commissioner. The Committee on Finance is composed of Commissioner Cohen, the committee chair, Commissioners McCabe, the committee vice chair, and Commissioners Horowitz, Kelly, and Richardson. All committee members, with the exception of Commissioner Cohen, are present today. In addition, Commissioner McCabe is remote. In addition, Chairman O'Toole, Vice Chairman Linford, Commissioners Bolwage, Eve, Helmy, LaBarbera, and Rosado are also present. Commissioners Rosado and Commissioner Rosado and McCabe, participating remotely.
All right, thank you. I call on our Chief Financial Officer, Libby McCarthy, who's up at the podium already, to present the financial performance results for the first quarter of 2023. Libby.
Thank you, Commissioner, and good afternoon. So I am going to present our financial results for the 3 months ended March 31st. And before I get started, I'll just go with my typical disclaimer, which is these financials, they're preliminary, they're unaudited. They are best understood in the context of reading the notes to the year-end financials, which are also available on our website. Some of the information, and to the extent the information presented in this presentation and the financial statements is forward-looking, I just caution that that's based on the information that was available at the time the financials were prepared, and that over time those actual results may differ from that forward-looking information. Just starting out, I'll say that we had a very strong quarter. This is a snapshot of what it looks like. And also just note that this is prepared on the basis of our bond resolution, which is included in our financial statements. This is what we use for setting our budget and our regular reporting to the board. Net operating revenues for the first 3 months of this year were $123 million, or 26% higher year over year. And then also very strong results when we compare that to our budget for this first 3 quarters, where net operating revenues were $21 million, or 4% higher than planned. This is driven by a number of different factors, which I'm going to get into as I walk through the financial statements, or the presentation, I'm sorry. But just a snapshot, it's really mostly the continued recovery in our activity as it relates to the COVID, coming out of the COVID pandemic. So let me move now over to our activity reporting. And just again to orient you on this slide, what we've presented here is the activity by business line. And as a framing point, we've used the blue line to show you 2019 activity levels. The yellow line is last year's results for the quarter, and the green line is the current period. We have TB&T on the left and PATH on the right. So TB&T and PATH volumes for the 3 months of this year were 103% and 59% of 2019 levels. The TB&T activity was also 3% higher than our budget for this quarter. That's driven by, again, very strong results in the region, as well as what we've been seeing is some impacts of weather. We had a very mild winter. And so that helped in terms of activity levels, and then very strong truck activity across the board. So that's a very positive start to the year for us on the traffic side. PATH activity was as I said, it's moving its way up. So we are at 59% of 2019 levels, which is an improvement over, as you can see from here, a significant improvement over the 2022 results, but it is 5% lower than our budget for the year. That return to the workplace that we have been looking for is coming in a little slower than it is, but we've watched it tick up each month, so that March results are actually 61% or so. That's the 59 I'm reporting here is the average for the quarter. Looking over at aviation and ports, the volume at the airports for the first 3 months of this year was 103% of 2019 levels. That's 4% higher than our budget for the year. And most importantly, that is a new record for volume at the airports. So this first quarter did hit a new record in volume for the airports. So seeing lots of demand for travel, most of it in the domestic area, but international and business are also starting to trend back. Port activity is 18% of, or is 100% of 2019 levels. So it's sitting, as you can see here, right on top of that. While it looks like it is below the budget for this year, it's reflective of an across the country reduction in cargo activity, driven in part by the fact that folks had already stocked up. So, but the ports are still performing quite strongly when you compare them to their share of market share versus ports around the country. So what does that translate into in terms of our gross operating revenues? They were nearly $1.5 billion for the 3 months ended March 31st of this year. And that's 15% higher than the same period in 2022. You can see that that's driven mostly on the chart by our tolls and fares. So 6% increase in vehicular traffic across the bridges and tunnels. Path ridership year over year is up. And then also factored into that is the inflation-based toll adjustment that went into effect in early January of this year. Rentals is also up substantially year over year. You can see the 500 million versus 432. That is driven by increased activity at the airports, as well as new rents related to the airport redevelopments. And then above that, you can see aviation fees. That's a cost recovery mechanism plus some activity-based fees. That is higher as well year over year based on that higher activity. And parking and other revenues are also being driven by activity. When we look at these results versus our budget, they're pretty much right on budget, just slightly above what we had been budgeting for the year. So in a very strong position from a revenue perspective. From an operating expense perspective, the expenses were $900 million for the 3 months. That's an increase of 9% over last year. And that's, again, responding to the continued recovery at our activity at all of our facilities. So making sure that we have adequate resources for traffic management, mitigation, customer service, et cetera. Also reflected in that is some new police classes as we are bringing in and training new policemen for attrition. And then we also have just the cost of benefits that are reflected in the employment numbers here. So again, when you look at that versus our budget, you can see that we were lower than budget for the quarter. So 902 versus the 918 budget. So that's a good position to be in. That's really driven by that mild winter weather. So we weren't doing a lot of snow removal, which is what we budget on a regular basis for this quarter. So what positive from that perspective. Moving to our liquidity position, could you advance for me? Thank you. Cash flow and liquidity very strong for the period. So we had $657 million of cash from operations, and that is a strong position to be in. Slightly below the prior year. It's a lot of that having to do with timing of when expenditures are made, et cetera. We had ended the quarter with cash and investments on hand of $4.6 billion. We also had available to us a little over $450 million in capital funds and revolver capability to support our capital plan. And we had 203 days of cash on hand to support our operations going forward. And then finally, turning to our bonds and other obligations, you can see here for the period ending March 31st, we're essentially flat to what our bond obligations were at the beginning of the year. So holding on the borrowing basis as well. So that concludes my remarks, and I'd be happy to take any questions.
Thank you, Libby. Do any commissioners have comments or questions about Libby's report? Seeing none, this concludes today's meeting of the Committee on Finance, and I turn it back to you, Mr. Chairman.
Thank you, Commissioner. Next